Read this headline. Even Americans earning six figures say they're living paycheck to paycheck, including people making over $200,000 a year. Turns out half of Americans making $100,000 a year are broke, and the number is even higher when we're looking at younger millennials making six figures a year. But more than 1 out of 3 Americans earning $200,000 a year or more are broke, with $0 left over every month after paying their bills. It appears that a six-figure salary isn't even enough to starve off feelings of discomfort. Now let me be 100% real here, because there's two problems at play. There's the system problem and then there's the you problem. The system problem is real. We've had inflation that's been eating people's savings, it's been eating people's salaries, the prices of things have been outpacing wages, things are more expensive, housing is more expensive, groceries are more expensive, the economy is slowing down. There's a lot of weird things happening in the economy, and the system is there to profit off of you being financially stupid. Banks profit when you're in debt, corporations profit when you spend all of your money, the government profits when you were just an employee because investors get tax breaks that you don't get as an investor. This is all 100% true with the system. Now, it doesn't matter how much money you make. If you are broke at $200,000 a year, there's something else going on. And this is where I want you to understand. Yes, there are these problems with the system. Yes, the system is designed to profit off of you spending all of your money, but at the end of the day, constantly blaming the system, constantly blaming the government, constantly blaming your boss, constantly blaming your landlord, constantly blaming everybody else in the world except yourself doesn't fix the problem. Because when you're sitting here pointing your finger at everybody else, there's 3 fingers pointed right back at you, and this is where you gotta also understand the you problem. And yes, it's very easy to understand this when you're making $200,000 a year. But it's the same situation when you're making less money as well. Because at the end of the day, this is not gonna fix your financial situation. But this can. If you're earning $200,000 a year, that's $16,600 a month. And when you're making $16,600 a month in gross, guess what that means? That means the bank is going to be willing to lend you more money to buy a house. That means the bank is going to be willing to lend you more money to buy a car. That means the bank is going to be willing to give you a bigger line of credit on your credit cards. It means the bank is more likely to lend you more money, because when you have a bigger salary, you become more credit worthy. And this is where it's so important for you to understand this, because everybody thinks that, man, if I just made an additional $1,000 a month, an additional $10,000 a year, an additional $30,000 a year, all my financial problems will be solved. But here's what happens. You work for that raise, you work to make some more money, and then all of a sudden, boop, your salary goes up. But do you know what happens next? Your expenses go from here to here. And for some people, your expenses actually go to here, because now as you become more creditworthy, you start borrowing more money, and you always, every time you make more money, you keep spending more money. And now you don't understand how it is that you never can get ahead, how you can never build any wealth, how you never have any freedom, because every time you get a raise, you feel even more stuck, and you can't leave your job that you may or may not hate. You can't take a vacation because number 1, it's going to be expensive, and number 2, you can't take the time off of work, and you can't understand how you're going to ever have a chance to be financially free. How are you going to give that real freedom to your kids? How are you going to have the time to relax? How are you going to finally go on the vacation and be able to relax? Well, it starts not by blaming this, but by taking care of this. Understand how the system works. This is the first rule that I always teach about in my financial education. You gotta understand how our money works. You have to understand how our economic system works, because the reality is, and this is gonna sound painful, our economic system doesn't care about you. Our economic system is designed to profit off of you, period. In fact, our economic system is designed to benefit the investor, not the employee, not the consumer, the investor. Now you might say, oh, those greedy rich investors, but here's the reality. You don't have to be a multimillionaire to become an investor. If you have an extra $100, you can now become an investor. See, becoming an investor means you just have a little bit of extra money that now, instead of you saving it and instead of you spending it, you're now investing that money. Now, I know that can feel very overwhelming. Where in the world do I start to invest? What stock brokerage do I use? What stock do I buy? How do I actually go about doing this? But it doesn't have to be all that complicated. I want you to think about it like this. If you were 400 pounds and obese, and now you wanted to lose weight, what do? Well, should I do keto? Should I go vegan? Should I do this diet? Should I be doing intermittent fasting? Should I be doing... At the end of the day, what should you do? Get on a treadmill and put down the donuts, right? You just get started with a little bit. because that's a step in the right direction. When you put down the donuts, you put down the ho-hos, and you get on a treadmill, now maybe the next thing you do is you put the treadmill on an incline. Now maybe you say, well, you can add in some weightlifting as well. Don't get into all the confusing stuff as to which way you do workouts. Just start picking up weights and do things with them. Just start moving the weights. And now as you start doing that, maybe you get a trainer who helps you lift weights. And as you do that, maybe you start learning about different diets. And maybe now you start looking at different types of workouts. And now as you start to get more advanced, you can start doing more things. It's the same thing with money. It is so easy to get caught up into the whole idea of, should I put my money into real estate? Should I put money into stock? Should I put my money into ETFs? Should I put it into index funds? Should I put it into individual stock? How do I put my money? Do I put it into dividend paying stocks? Should I put it into a high growth ETF? It's very easy to get overwhelmed. But this is where I want you to remember the reason why so many people stay broke isn't because they make the wrong investments. It's because they don't invest their money at all. You're gonna make mistakes. You're gonna have screw ups. It's a part of the process. But until you make those screw ups, you're never gonna get to the next level and start to see more of that success. And so the very first thing you got to do, the very first thing, I don't care if you're making $200,000 a year, $2 million a year, or $20,000 a year, is you gotta stop spending all of your money. Now, how do you go about doing that? You gotta find a way to have less expenses than your income. Maybe that means you work to earn more money. Maybe that means you work to cut back your expenses. Maybe that means you do both. But if you spend all of your money, or more than all you earn, you will never, ever have a chance to become wealthy. Because the way you become wealthy, remember we just established this, is you have to invest your money. How do you invest your money? You gotta have some extra money to invest in. And in order for you to do that, you cannot spend all of your money. So the very first thing you gotta do before you do anything else is you gotta have some extra money, that we have some money to invest. Now that you have some extra money, let's just lay the groundwork. The first thing that I would want you to do is have $2,000 saved to protect you against an emergency before you do anything else. You gotta have an extra $2,000, and then I want you to pay down your high interest debts. So if you have credit card debts, before you worry about investing your money, pay down your credit card debt first, because that 25% interest rate that you're paying on your credit card is going to skin you alive financially. So before you worry about investing your money, pay down your high interest debts, your payday loans, your credit card debts, and all that stuff. Now, once you do that, now we can start talking about how do you actually invest your money. And it doesn't have to be as complicated as you might think. You can go and find whatever stock brokerage you might like. Just go to Google, find stock brokerages, find one that you like. Simple. Once you find a stock brokerage, you gotta link it to your bank account, and now you need to find something to invest in. This is where people start to get really overwhelmed. Do I buy Amazon? Do I buy Nvidia? Do I buy Tesla? Do I buy Microsoft? Do I buy McDonald's? But the thing is, you don't necessarily have to pick the best stock. In fact, for a lot of people, that is a losing strategy, because now, how do you know what price point you should come in and buy Amazon? When do you actually go out and buy it? Is it a good time to buy it today? Should you wait 2 months? The reality is, if you're not interested in actually studying the company and valuing the stock and keeping up with their earnings statements and reading their financial statements and keeping up with the actual company, well, then you might not be best served by investing in an individual company. In fact, maybe then a better thing for you is to invest into the broad American economy, because there are funds you can invest in that will give you exposure to the American economy. But I do gotta give you the disclaimer, I'm not a financial advisor. Investing has risks. You're never guaranteed to make money when you invest. In fact, you will lose money at some point, so make sure you always do your own due diligence and never blindly trust a random guy on YouTube. But what I mean by this is there are funds out there that will give you exposure to the broad American economy. So you have a stock brokerage. I'm going to give you a couple examples here. Again, I can't tell you what to invest in. These are just examples. There is an ETF out there called VTI. VTI is a fund that gives you exposure to the total stock market. So if you said, I just want to invest my money in the stock market, but I don't know which stocks to invest in, this will give you exposure to the total stock market. If the stock market is going up, well, then your fund will go up. The stock market's going down, your fund will go down. Another one, if you want to get a little bit more niche, is SPY or VOO. These are two different ETFs that give you exposure to the same thing. These are giving you exposure to the S&P 500. This is a group of the 500 largest companies in the stock market. So now, instead of investing in the total stock market, these are two funds that will give you exposure to just the largest 500 of them. And now, if Amazon, which is at the time of me recording this video, one of the 500 largest companies in the stock market, if Amazon starts to do really bad and they're on the verge of bankruptcy, what happens? These funds will kick Amazon out and replace it with a different stock. and you don't have to worry about doing anything. All you have to do is keep investing your money here. Now, the reason why I put an asterisk here is because I personally have my own money invested into VOO, but the whole idea here is now you're just investing in the top companies in the stock market. It's essentially a way for you to invest in the American economy, and you don't have to really do any work. And the way that you win here is to follow a strategy. Now, there's a couple things I want you to know. Number one, if you are an investor or you want to be an investor, my team at Briefs Media publishes a free daily newsletter called Market Briefs, where we break down what's happening in things like the economy, stocks, housing, crypto, and the global markets into a fun and witty and easy to read newsletter. Plus, when you join Market Briefs for free, we're also going to give you my investing masterclass as a bonus for free just for joining Market Briefs. So if you want to join Market Briefs for free and get our investing masterclass as a bonus, all you have to do is click the link down in the description below. Once you understand all this, you need to have a strategy. Now, the strategy that I like to talk about when it comes to investing into things like this is something called ABB. Always be buying. This is how you win, because the reality is markets go up, markets go down. Recessions happen, economic booms happen. Market crashes happen, market booms happen. It's happened in the past and it will continue to happen in the future. In fact, do you know how many recessions we have seen in the last 100 years? Take a guess. It's not 10, it's 16. Do you know how many market crashes we have seen in the last 100 years? It's not 16 or 20, it's 25. Which means we're averaging more than 2 market crashes per decade. And by market crash, I mean a bear market, which by technicality means that the markets have fallen by at least 20%. So we know the market crashes happen, we know the recessions happen, but every time markets go down, what do we see happen? People panic, they freak out, they think, oh my God, the world is ending, the economic system is collapsing, everything is gonna go down. But if you are a long-term investor, which is the way you win here, those create great buying opportunities. This is why I talk about ABB, always be buying. You want to have a system that's automated where every week, or every 2 weeks, or every month, many brokerages will allow you to do this for free. You have a system where money is pulled out of your checkings account and is automatically invested into the funds that you want to invest in, and you don't turn it off. Period. You don't turn it off when you go through a recession. You don't turn it off when markets are crashing and everyone is running around with their heads chopped off. You don't turn it off. You just keep buying. In fact, the only change you might make is when things are going down and everyone's freaking out, you buy a little bit more aggressively. Now, it's hard to do that because when people are panicking, everyone's saying you need to get out and sell while you still can, but that can be one of the best buying opportunities. And this is why I call it always be buying, because you want to stick through it. Stick through the downturns. Now, sometimes these downturns can last a week. Sometimes they can last a year or a few years, but if you stick with it, what we have seen over the last 100 years is that markets eventually recover, and that can create great buying opportunities. And this is where you got to understand the game. We are not taught how to win in this system. School doesn't teach you how to become an investor. School teaches you how to be an employee, period. But our economic system is designed to benefit investors. That means you have to work as an employee to earn your salary, but then you got to turn your salary into investment money. Period, because that's how you win in this economic system, and that means you can't spend all of your salary. So now you're going to work to make money. Now you can't spend all this money, that way you're not just fueling the system, now you're gonna fuel yourself, and that means you can't feel all that pity and keep beating yourself up. Now you gotta take some of the money that you don't spend, and now you have to start investing this money. And now when you start investing this money, now you can start to find what's the better opportunity for you. You can start by doing this, okay? This is the simple way to start. And then you can see if you want to get a little bit more involved, a little bit more advanced. Maybe now you want to start looking for individual companies. You want to start investing in your own research. You want to start paying attention to more financial trends and shifts. That way you can find better opportunities. That way now you can potentially take on more risk for more potential return. Maybe you want to start investing in real estate. Maybe you want to start investing in startups. All these things can come, but you got to just get started first, and they get started with you understanding that you got to get in control of your salary. Because what we have learned in America, and it happens across the world now, is it doesn't matter how much money you make. You have to get in control of your salary, because everybody assumes that if I make more money, I'm going to have more money to save and invest magically. But we have seen through the numbers that that's not true. People are making $100,000 a year and are still broke. Many people are making $200,000 a year and more and are still broke, living paycheck to paycheck. And this is where we know, yes, there are some things in the system that are set up there to screw you over. Now, okay, cry about it for 5 minutes. Now what? Now you got to take control of you and understand you got to get in control of your salary, of your income, wherever you are today. And now you got to turn that income from your job into assets, because we know that this system is benefiting the investors. And now you just find a way to get started. And once you get started, then you can work to optimize it. And then you're off to the races. Now, it doesn't happen overnight. This is not a get-rich-quick system, but this is a get-rich-actually system if you are willing to put in the work, stay dedicated, and go through what I call the decade of sacrifice. The decade of sacrifice is you're going through 10 years of spending less and earning more so you can invest like crazy, because if you can go through that decade of sacrifice, you're not even going to be able to recognize yourself at the end of the decade. The time is going to come and go. You might as well become wealthy at the end of the decade as well. Being wealthy means your investments are making you enough money to pay your expenses, so you don't need a job to pay your bills. The problem is most people will say, just invest your money into the stock market. But what if you don't know what stocks to buy? Or what happens if the stock market crashes and now your portfolio gets cut in half and you were relying on that income to pay your bills? This is